Well, it could have been a much better close for the benchmark Nifty index in today's trade. But at 18,144, the index managed a very flat close, up by just 7 points. Good evening, traders. We are tonight on the 15th of November. It's a Monday evening, 6 minutes past 8 o'clock, 8 p.m. And we are looking at the daily chart of the near-month futures. We have to discount this intraday high of 18,410. It was more like a freak trade at the very opening. Around 1,100 shares traded. I did check during market hours today. So where are we? Let's take a look at the 75-minute time frame. We are at the 18,150 range zone that we had marked, and we had managed to go above that, couldn't stay, but just hovering right at the brink of it. Now, good thing is the Friday's move that we had was impressive, and with such kind of a move, a follow-through consolidation is very, very obvious and normal. Today session can be marked as that kind of a consolidation, but there was a little bit of weakness here and there. We did manage to see some bit of intraday volatility as well. So what should be our view? Now, the fact that the short-term trend has, thanks to Friday's move, the short-term trend has moved up is a good thing. We were talking continuously that 18K all the way towards 18,150 is the resistance zone, and if it manages to even sustain above 18K, it's a good thing. And so far, no complaints. The index has sustained itself above that 18K mark, even sustained pretty well above that 18,100 mark. From a very short-term perspective, I sense that a move above the last bar's high, which is 18,170, should give us a short-term bump up on the upside. And on the other hand, the intraday lows that we noticed today, which was around 18,082, a little below that 18,100 mark, can lead to follow-through selling. The bias should stay on the upside. If we consider the trend of the 75-minute time frame, the daily and the weekly charts, if we combine them, then trend indicators are suggesting that one should look upwards. The prices should find strength and go on the upside. On the flip side, if we see the index slip below 18,100 or probably towards 18K, then we are back to that volatile pit. Then the fact that the index is trying to trend, you can see that attempt. You can see over here the moving average is turning positive, then again negative, then again positive. So the index is trying really hard to find itself back to a trending phase, but not so. And so a move below 18K and we will be definitely looking at a volatile range bound market. So let's stay a little bullish, but the point is, if we are bullish, then we have to look for sectors and stocks which can support that bullishness. That's extremely important, that which are these stocks which will support the index on the upside. One look at Bank Nifty, it doesn't give us a very good picture. This is the 75-minute time frame of Bank Nifty, and we had marked this range, which was the erstwhile lows, should act as current highs, and that's exactly to the script what the index has played in today's trade. It did face resistance here and it stayed low, it stayed down. You can very clearly see how beautiful the moving averages have rolled down. So it's in a nice downtrend. The VWAP pressure is also definitely here close to that 39,000 level. This is a psychological 39K for the Bank Nifty. On the downside, 38,185, 38,200 is the support. It has worked really well. We have a Fibonacci, we have a VWAP, we have previous high. So no doubt 38,200 is the pretty strong support for the short-term support for the index. But a look at the 75-minute time frame and the daily time frame together doesn't add too much of a confidence. Any movement can come from few of the stocks, like we've noticed today. Kotak Bank, but it slipped. We've been talking about ICICI Bank at length last week and expect that stock to give us some movement. But even if the movement comes, I think even if tomorrow we see a move above 39K, very important would be to sustain that move. And then only I think a much better move will shape up for the Bank Nifty and the banking stocks. Apart from that, in today's trade, it was the pharma, FMCG and consumer durables which gave a nice bounce back. Of these three sectors, pharma and FMCG both are in a short-term downtrend. So we are looking at this as a short-term bounce back, and FMCG primarily ITC was the stock which contributed to these gains. CNX IT was also there, and we can clearly see that IT is just spending time in a range-bound market. So nothing much happening there as well. Metal is the one which broke down. We spoke about Tata Steel, and we'll take a look at that chart also. And we did see some weakness coming in PSU banks, a bit of auto, and a bit of finance. So overall, if you take a look at this list, it's fairly divided market. 7 points positive Nifty, half of the sectors positive, a little less than half negative. Biggest gainer pharma 1.45%, biggest loser metal 1.8%. Seems like very well divided, distributed index. So this can lead to stock specific movements tomorrow and for the rest of the week. So even if the index doesn't do much, even if the index stays within plus minus 100 points, we might get good opportunities in stocks. So I think that will be a better idea. And when I say that, let's take a look at the top stocks, how it played out today. Tata Steel, if you remember this blue line, and we have a nice breakdown on the daily charts of Tata Steel. This is a clear-cut, strong breakdown from the stock, and unless it manages to bounce back above that 1320, 1325 mark sometime soon, then this stock is probably heading further down. SBI had played its part and it's slowing down. Very likely a prospective left shoulder head kind of a behavior from the stock. Bharti Airtel is one of the best structures on the daily charts among the top 17 stocks, and this stock should be bought at lows, at supports. Larsen & Toubro, you can clearly see that the size of the bodies have started to drop, and engulfings and dark cloud covers kind of patterns one after the other suggest that probably the stock is getting tired. iBank, we've been talking since last week, can play a little bit of role to support the Bank Nifty, but it's not picking up momentum on the upside. Reliance can be another interesting stock, though we spoke about 2600 Reliance, if you remember. The VWAP, there you go, exactly at the VWAP from where the stock has cooled off. I like one aspect about this chart is the short-term trend has rolled up, and any short-term correction from here on towards 2560 can be an buying opportunity. But 2600 is a tough nut. You can very clearly see the VWAP, you can very clearly see the erstwhile lows. So 2600 is an important level. So if we keep on doing this and checking the stocks, these stocks at 17 stocks, we will find that few are looking decent, few can support the index. Others, like we saw Tata Steel has given a breakdown. L&T, SBI are looking tired. Bharti Airtel also looks a little tired. ITC has picked up. So it's like a divided market, and so we need to be really good in our stock picks. Then only, irrespective of the market movement, we will be able to deliver some returns. Let's see. Let's go to the Iris software and quickly do our usual daily scan and figure out within the Nifty 200 which are the stocks which can give us some kind of a move in tomorrow's trade. Now, if we run this scan, 200 stocks. First, let's take a quick look at the stocks which has given us an inside bar. And we have GSPL. I'll turn this into the Japanese candlestick chart. So GSPL is in a downtrend, and yes, it's an inside bar. Looks like a belt hold. Okay, nothing great. TVS Motor is an inside bar, but it's definitely stretched on the upside, and one can look for a fall below the low. Prestige, I would suggest to stay away from a short-term trading perspective because the last 5 days range has expanded. CanBank is slowing down. Let it hit a little further lower levels. 225 can be a good price. BHEL can be interesting. I think of the 5-6 inside bars that came up, I would probably go with BHEL tomorrow from a short-term intraday or 2-day kind of a trade. But it's very likely to be a short-term move, not something more than that. So interesting. Bullish and bearish Rami pattern, Tata Elxsi, no, this is not, because it's in an uptrend. Neither. Godrej Consumers is in a sharp downtrend, and after Friday's and Thursday's sharp sell-off has created some kind of a bullish Rami pattern there. Okay, let's see if we have some better picks. No. TVS Motor, no, it's in an uptrend. Bharat Forge, today's range was quite a bit. We can see that the body of the candlestick over here is within the red body, but the range is a little disappointing, because it doesn't make sense to chase and buy above 798 for Bharat Forge. 8 Sale Tech is slowing down. This is definitely not a bearish Rami pattern, because it's in a downtrend. Whirlpool, range expansion for the last few days. Bharti Airtel, yes, this is a very nice, good looking bearish Rami pattern with a 2-bar negative classical divergences right on top here. So from a short-term perspective, one can look to short. I will not, because the stock is in an emphatic strong uptrend, and it has proven to be a relative outperformer. So I'm definitely not going to go and short an outperformer in this. Jubilant Food can be a gutsy short trade from a short-term perspective. That's the bearish and the bullish Rami patterns. Breakouts, essentially I'm looking for drop of volumes, drop of range also, so that the stocks can give us a move. Let me quickly just click through them, and try and find Tata Chem. Look at the beautiful range contraction that the stock is going through for the last 1, 2, 3, 4 sessions. And clearly, if you take a look at today's high, 948, yesterday's high 946.4, and as in Friday's, and Thursday's high 946.5, very clearly breakout above this is what is cooking up. On my right hand side is the 75-minute time frame of the same stock, and you might guess that it's taking a shape of a coil, like a symmetrical triangular pattern. So Tata Chem is a breakout candidate. Amongst the others that I'm clicking through, I'm essentially looking for range and volume contraction, wherein the stock is in an uptrend and can give us a follow-through movement. I think Tata Chemicals is one that one can work with. Oracle long and Oracle short are intraday trading setups on the long side. Dixon Technologies looks promising, pretty promising. None of the rest. On the short side of Oracle, no, I wouldn't go with. At times we get long and short both on Oracle long as well as short. That's because of the 2 days inside bar scan that we go for. So I think Tata Chem and Dixon Technologies from a short-term perspective looks pretty good for Oracle and the breakout candidate. Amongst the large caps, Reliance is the one which can support the index after a short-term correction. ITC played a good part, so we'll see whether Hindustan Lever picks up momentum in tomorrow's session or not. And amongst the banking, I think it's ICICI Bank. It's time for the stock to show some strength, or else it's definitely going to close this gap, and we're going to see the stock sub 765, 760 kind of levels. As we create this video, SGX is up 39 points, 18,178, not bad. Dow Jones is up just 77 points, and S&P 500 around 8-9 points. Dow Jones is holding fairly okay. This is the daily chart. This is the 75-minute time frame will not be applicable so much for the Dow Jones, but I'll stick to the daily. Looks like a nice uptrend and has picked up a little bit of momentum there, but let's see, because in this entire rally the stock has just corrected once in just 1 day, so a close look at the global markets will also be important. So let's wrap it up then. Bullish, yes, from the perspective of the trend we should stay bullish. Cautious, of course, and it's not the kind of bullish trend wherein majority of the stocks are moving up. It's a very well distributed, divided market, and even if the market goes up, your stock may not go up. So you need to be really good and careful about your stock picks. I hope you do that and take care of your open positions and of course to risk management. Take care of yourselves, trade well, trade wise.